Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, October 10th. It's 12:10 p.m. Eastern Time, so this is video number 2 of the day. I just wanted to get another one out in following up with the sell signals we just had on the markets. Comments have been quiet. Either everyone's on vacation or is just giving up on the market. But these are the sell signals I've been waiting for a long time now. It seems like forever. We have a clear impulsive breakdown below the uptrend lines on QQQ, rejection on IWM. So I'm just going to kind of reiterate my thoughts. This is, and in fact, I talked about it as recent as yesterday, that could just take one quick move down and start to really do some technical damage to the charts. Again, right now, all it is a sell signal. Let me just say this, and let me be very succinct up front. If this is the great bull market, we're going to have that blow off top like so many are calling for, and these, we're just going to rally into year end and have a melt up top or whatever you want to call it. This is the perfect time, not necessarily today, could be today or next week, for the markets to undo these gains, because these are tens on a 1 out of 10 scale, 1 out of 10 for sell signals. And so if the market can somehow gobble up these breakdowns, impulsive, and just power through them and take back those trend lines, that's going to be bullish. And that's probably going to be the catalyst for more upside in the coming weeks to maybe into year end. So as of now, like I said, they're sell signals. Take them on face value. That's what I do, or not. If you think the market's going higher and you're positioned aggressively long or net long, just have your stops in place, and maybe they will buy this back up. Maybe they'll go in and back test this. There's an infinite number of possibilities. All I wanted to say is that, again, to just reiterate, this is what I've been waiting for. And if you've followed me for a while, you've heard me say this so many times, but I'm going to reiterate it. Today I was doing the video, and I was towards the tail end of the video covering the BD's business development companies, and then I had alerts going off. I don't know if you could hear them in the background. My computer does a little, a bell sound when the alerts go off, and everything was breaking down. And what I've said so many times, I even predicted last week that this week would be probably the start of what could be a very big and swift drop. And they waited till the 11th hour. Well, at least we're not at the end of the day Friday, but this is usually how it starts. And the point I wanted to make is that it never fails to amaze me, because I told you what I was going to do, and I had all those alerts going on. I wrapped the video up quickly. I wanted to jump in, add to some shorts, and increase VIX longs like I told you I would when we broke down here. And I immediately toggled on Bobblehead TV. If you use the Thinkorswim platform from Schwab, formerly TD Ameritrade, formerly Scottrade before that, I've had it that long. They give you it's cool, a little pop-up window you can access in there and watch live CNBC without the commercials, which is nice. Commercials drive me crazy. So anyway, I turned that on, and they were just chatting away as the market's plunging like business as usual, trying to figure out and scrambling until they could finally realize it was Trump's tweet. For the life of me, I don't know why, and this happens all the time. He tweets something out, and it takes CNBC about 10 minutes to pick up that that's what it was. I've seen this many times over the last year. I told you I don't follow Truth Social. They wanted phone number and all this to verify the account. I'm not giving that info out, but that's what triggered it, and it took them a while, and then they picked it. It was that tweet or whatever you call it he fired off today on his social media account, and with China. Anyways, we'll see if it sticks, guys. All I can tell you is the point I'm trying to make is that is far from mere coincidence. I told you these wedges were ripe to break down. They were at the perfect formation. They usually break down right around this sweet spot, roughly 70-80% of the apex of the wedge. And I often say that quite often there's a catalyst when you have a bullish or bearish technical chart pattern. Usually there is a fundamental catalyst that will trigger it, but the technical pattern is what it is. So you could have had earmuffs on, TV off today. It doesn't matter whether Trump tweeted or not. That level broke, and you had very impulsive selling. That is the farthest thing in the world from mere coincidence. again, it just never fails to amaze me how the fundamentals and the technicals very often align like that. And look where we stopped today. So these are the targets I gave you recently. I mean, heck, just this morning, just before the breakdown. No, that's not it. That's the most recent one. Let me pull it up 1 second. It was right here, last chart. And again, I cover this every day in videos. This was Wednesday. And it's breaking about right here, coming up, coming down. And that was it. And you can see first support, second support slash target, 596.07 right there at the top of that range. That was Wednesday. Then we broke down. We went right through there. And this is, remember, I talked about in the video when there's a lot of hot air, extreme excessive bullishness, a lot of complacency. Shorts have been blown out. Most of them have just given up and left the building. That's when you, as I often say, will blast right through those first support levels, like they're often like they're not even there. So what do? We went on down through, hit that 596.07. This is right when, after the video, I made sure to get, before I even had a chance to upload and post the video, I fired off these sell signals. And like I was saying, you got to move fast. This is the biggest drop we've had in a long time. And look at the low of the day. Low 595.93, and I have it at 590, about 596. That's close enough for government work. You're talking a mere basis point overshoot of that level. And what happens? So man and machine buy faster than you can. You know, traders should have, if that's all you're targeting for, or you want to game bounce, a stop loss order there, a stop limit order to cover your short and then game a bounce. But again, I've told you these aren't just 60-minute breakdowns. This is why I'm doing this video. These are breakdowns. This is that long-term uptrend line, and that's a big fat bearish engulfing candle. So like I said, I wouldn't be shocked if the market can rally it up. It's not what I expect. I'm going to take this sell signal on what it is, on face value. And I can tell you, like I always do, on bearish engulfing candles, the strategy is you can short with a stop above the day's high, the top of that candle, and you have minimal downside compared to your profit potential. Now, this is the daily chart. These are the, price targets I've given you on the daily. You can see I have support. These are also potential targets right now that where we're at. But if this proves to be a topping stick, then again, you're going to hit most likely these longer term targets. And then again, if we get down here in this zone, this is where I've been saying my odds for my longer term targets on the weekly chart will begin to increase exponentially if and as QQQ goes down and then ultimately takes out that 466 support. And those are the weekly targets. They haven't changed for quite a while now. If you're new to the site, they really started back here, market top range, calling for a major top in the market. We hit the second of my two targets, made a marginal new and still divergent high. Said that high would likely fail. We did. We had that big drop there in 2025. We hit my third target. And again, this is often the case. You hit a target, you're going to bounce. And we did. And again, a marginal new and still divergent high. And that should, if these longer term targets play out, this is the downside, which is over 50% now. It's going to be a drop if that final target's hit of about now 57% or so. But again, first things first. This could be a buying up, and that's what we'll watch and react. And that's why if you're targeting or expecting a 57% drop, if they can gobble this up by next week, that's damn bullish. That's all I can say. If they can gobble that up, meaning reverse and bust well above that bearish engulf, today's, so far, the day's not over, but so far, if they can pop above that bearish engulfing candle, clearly back above this primary uptrend line, then I find that hard to spin as anything but bullish. And like I said, you're going to see there's not a lot of short covering to be done right now because, again, I've monitored short interest. And it's dropped to in many stocks, key stocks, and at or near or below 52-week lows, and so put to call ratios are low. So everyone's mostly on one side of the trade right now. This is QQQ on the weekly. I just wanted to point out. Watch, if we close down today and we take out today's lows, you're going to put a bearish engulfing on the weekly as well. So that's we had one right there. And from there, you had a drop of about 25%. And so just something to watch for there. And these are, again, this chart's been given to you quite a bit recently. These are all your support level potential targets. I don't know if you can see it in here, but there's a thin zone that goes from about here down to about here-ish. And meaning not a lot of trades occurred in this area here. So if you enter that thin zone, it's likely to be backfilled. And that would take us down. Let me color it up for you real quick so you can see it. And I'll try to touch on that again. I'll make it yellow. All right, so that would be the bottom of that thin zone, and that's a potential target as well. So we'll see where the day goes. We just flip over to futures. I already covered that. Sliced right on through S1. Like I said, when we broke down, there was a breakdown. You don't have to squint to see it. It's impulsive. It's what you like to see. Reverse just right above my first target zone. And once that target zone is taken out, it's support. That'll open the door to T2. And again, these are 60-minute charts. So depending on what happens today, even next week on the daily and weekly charts, I may focus on, start focus on some longer term targets on both these 60-minute as well as the daily charts. But this is probably that comparable bottom of that thin zone that I just gave you on QQQ. All right, let me get to the other ones and we'll move on. IWM, small caps. We have an official short out on that based on the daily time frame. I've covered that quite a bit recently too. We had a breakdown there of the primary trend line right here. So these broke down in ahead of the Nasdaq 100. So did the S&P 500. Back testing, as I mentioned, and then the other day we had as I mentioned, a pretty objective, pretty impulsive rejection there. But I gave you this secondary blue trend line, a minor trend line, and told you that would then trigger the next sell signal and objective short entry, and we clearly broke that today. So again, you have 3 current targets, and if depending on how things play out going forward, right now for just swing trading, that's my max target zone. But if and as the charts develop or how they develop going forward, I may add additional targets. Okay, and as I said, the juice, in my opinion, if these breakdowns stick, is to be made in the in futures. We say my preference are the VIX, the VIX Volatility Index, which you can't trade, you can't buy or sell it directly, only indirectly through derivatives. Derivatives are something that derives its value from another thing, and that would be VIX futures, options on VIX futures, or any of the various VIX futures, the ETNs and ETFs that track them. And this is just the proxy I've given you. And so we were on a buy signal earlier this week. We broke out and said that was a buy signal entry with a second buy signal or add-on to come on a break above R2, which has now happened. My targets, if hit, if you took the breakout, if T5 is hit, that's going to be 170. Oh no, T6 is my current final. 241% return profit if hit. And again, the VIX can certainly melt down, but as I've covered many times, we're at not only towards the lower end of the trading range, but when you go to the VIX, spot VIX, we're also at uptrend line support. This is VIX, the spot VIX. Coming off that support, we're going to break out there. And we just hit, and see, this is not coincidence either. That's the target I gave you, the next target. I said and the other day I covered this, I said your next buy signal will come on a break of 1720. Boom. And I keep saying that there's a lot of hot air, and that's why I do these videos, that you got to act fast. If you sit and wait, and you can, and the VIX, once she wakes up, she likes to run. And quite often she ain't going to let you in. If you ask me 3 days or a week from now, and the VIX is up here, if it's objective to enter, I'm going to tell you no. I don't like chasing things that are up 80, 50, 100%. It may still go up to those higher targets, but what happens then? Some of these moves start out and then boom, and then it falls just as fast as it goes up. Who knows? Maybe the market starts to correct. And then, wouldn't surprise me to see this administration come in and start talking about Trump tweeting out banning short selling. That'll come at some point in the next bear market. I promise you that. You will hear talks and maybe actual, regulations coming in to try to ban and limit the blame short sellers on the next drop. Not the fact that the Fed has created a ginormous bubble along with DC. But anyways, I digress. So either way, I just wanted to say that that's it. So the reason the VIX future stopped today, that was a very good resistance level. That's why I had it covered up, target. And it's simple. Maybe this was a one-day blip. If the indexes take out the recent highs, today's and yesterday's highs, we're probably going to fall back down. And if they go much beyond that, we're going to come down to the low end of this is really the base of the VIX in recent years. There is no hard bottom on it. It's zero, I guess, technically, but you'll never get there. Otherwise, if the next support levels break on QQQ, SPY, everything else, whether it's today or next week or in the next few weeks, we take that out and then we'll most likely go up to these next targets. Okay, and then VIX futures, I'm forced to at least roll the chart. Now I still have, and what I added to today are both my Octobers, the current ones, and then the Novembers. If you're wondering, because I get these questions all the time, and lately everyone's been quiet, but if this market wakes up, I'm sure I'll get some comments. You're going to see these ETFs, ETNs usually lag behind, and everyone says, well, why is the VIX up X, and yet my VIXY or whatever instrument, the VIX, spot VIX, even after fading off a good bit of today's gains, you can see this is the high right there, the skinny part of that candle, the body, that's where we're at. This one program has delays. I've got live streaming charts on other platforms I'm looking at. I just use this one for charting purposes. But so you'll say, oh, well, why is that up 25%? And my VIXY is up 9. Remember, this is an ETF and it rolls futures. And what we're going to do now is we've got a little over a week left on the Octobers. But you're starting to see traders are rolling into the Novembers, and this is short term. So really right now, they can't roll in a day. I could roll in one day. If I have 30 futures contracts, I can roll them in one day. I'm not going to hurt the price. Big ETF has so many contracts, they're going to roll gradually, and that's what they've been doing. So they're rolling in, and the Novembers are usually up less. In fact, we'll look at it real quick. So the last chart I gave you was right here, and it had the still trading October contracts. In fact, let me tell you what the volume looks like. So I've got 123,000 shares traded right now in the Octobers versus the Novembers have 94, almost 95,000. So they're rolling in. The Octobers are still more liquid, but this platform, once they roll it, they don't give you the October. You can get the Octobers live, but it's not the continuous, so you can't see history. If you don't know what I'm talking about, that just go with it. I can pull up the Octobers, but it's going to show a truncated history. When I go to the current, what they consider the current continuous contract, that's that infinity sign right there. They'll splice back and kind of average in history. But so these are the levels. What I did, I just want to let you know that when futures roll, I replicate the lines based on the reaction levels that I see. But the price levels will change on futures, whether it's natural gas or the VIX. So that was the October I gave you before. And as I said, a buy signal would come on a break above that 1865 resistance, which is based on this base right here. You had I undercut that and grabbed all these lows right here, took it across, and so that was the previous one I gave you. Now we're on the that's by without choice. I have to chart the continuous now on the Novembers here, and so that's it. It's broken out, but the levels have changed. And what you can see is this one, because there's more time left, they don't move as much. Those short term, the Octobers are going to respond a lot more to moves in the VIX because there's less time left on them. So I just wanted to let you know that you're going to get more juice on the shorter term ones, but they're going to expire and roll soon. The volume will start tapering off next week, and then you'll have more volume in the November. So what I did, if you're in that trade, if you trade futures, I re-replicated at the same levels, but the price values are different. And so, however, that is clearly a breakout. First, we broke above the bullish falling wedge. That was your buy signal number one. Now we broke above the resistance. And so that was a whole false breakdown whipsaw thing. And so if we can hold and build on these gains, it's going to look good. Now, again, this market's been just had a relentless bid. And if they somehow gobble this dip up and take us to new highs today or next week, yeah, this breakout's probably going to fail. Otherwise, it has the potential to rip like these two other previous bullish falling wedge breakouts. And we caught both of those. We were and even just like this one, positioned before the breakouts on both of those lows, I believe it was. Okay, and I'm just gonna go over this is today's alerts. Like I said, when I was doing that video earlier, they started going off like popcorn, a lot of price alerts. So I'm just gonna cover these for you and just take a look at some of the stocks that have triggered alerts. So here's one, AutoNation. And when I look, this one is a short setup, but I wouldn't short it yet. It triggered the alert. I had the alert either on the trend line or that 215 level. I think it was a trend line. But, right now we're on it. So there was a lot of selling on the breakdown. And so, what I'll like to see is this stock either clearly, solidly take out both this price support, 215.32, and the trend line. And all the better if we can print a daily close below there. And you can see I'm going to give you a target if you're interested in shorting AutoNation. That's AN. First target right here, 208.73. Second target right here-ish. I might raise that a little. Around the 200-day moving average is 197 or so. And again, this is just in no particular order, just things that have fired alerts. Need to see the knife go through this beast. This is JP Morgan, the 800-pound gorilla in the financial sector. And I promise you we're not going to have a half-decent or better correction in the stock market until this stock dies. All the big banks are set to start reporting next week. I can't remember if JP Morgan's next week or the following. And then we'll know if the financials have more life left in them. But so I have an alert triggered, but the financials often tend to find support on the 50-day moving average. In this case, it's been a little bit above it. So we are below it. And again, I like to say the redder the better. So I want to see this trend line taken out on JP Morgan. And big divergence tells me that it's going to break down. I've been very clear on not only showing you what I see in the charts, but which way I think they're going to go. And we just need to get, like I said, the financials are the second largest, or is it third largest now? Second largest sector in the S&P 500. Oh, let me do that. I'm going to get back to my alert log, but let me just confirm with you it goes without saying, but remember I told you until tech breaks down, the market won't break down. And this is XLK, the tech sector, by far the largest in the S&P 500, third of the S&P 500 of the 11 sectors. There's 11 sectors. This one sector makes up 1/3 of that. And that's clearly a breakdown. You do not have to squint to see it. Again, if they save it, hey, I'll talk about it at the time. As of now, it's a breakdown. There was a previous all-time highs there, two highs, and a breakout. Right now, we're back testing it. Some people will buy that. So once today's lows go, really, that should open the door to the next leg down. But it is a breakdown. Make no mistake about it. If it gets reversed, then we'll talk about it at the time. XLF, financial sector ETF. Just yesterday, I told you need to take out 53.10. That's been taken out. There's a sell signal there. Again, let's see how we finish the day. And then how we follow through next week if we do get a sell signal. Nothing will surprise me in this market. I've seen just an extremely resilient bid. Investors just shrugging off any type of bad news, and now they have that blackout period where they don't have to worry about a bad economic report or bad inflation report because of government shutdown, which is probably going to go on continue for weeks. So we'll see. XLY, discretionary. Again, all these I covered, already broke down. It just continues to build on its gains. Broke down, back tested the primary uptrend line. XLC, I already covered all this. So I just wanted to point out that the two I was waiting on to see, XLK and XLY, have broken down. And let's see if that sticks. Okay, back to my alert log. JP Morgan I just covered. Again, need to really see it get a little bit away from there to say that it's broken down for good. And also, let me just add this. This is very important to add. The big banks are going to start reporting next week, right? most companies will kind of go into a holding pattern, not make too big of a move in either direction, because who wants to commit big right before earnings? So the market, the financials, my guess will probably relatively hold up to a greater or lesser degree until they report. And if the market likes what they're selling, even if JP Morgan breaks down today, tomorrow, next week, and then reports, it could go the other way, or it could build on those losses. So I guess the bottom line is, guys, like I've been saying for a while, today is obviously an objective short entry add-on, but it's still not that all-in moment yet. But it's pretty good. It's the best sell signal I've seen in a long time. There's always going to be a reason to wait. There's always going to be some economic report or some earnings report. And I'm a believer that the charts, the posture of the charts will dictate which way a stock will go after earnings. And JP Morgan's just been diverging, making big, just like here, that divergence was building forever, building. And this is about the time you get the comments that, oh, these divergences don't work, or you keep saying it has a divergent high. And I always say divergence isn't a sell signal. What's a sell signal is a break of support, on JP Morgan. I guess we had probably on the 60-minute chart, that little wedge right there. And then that's a sell signal. And then when you get them after a divergent high, that's usually where you get the big corrections. So we had the divergence, it's been building. Bigger it gets, typically the bigger the drop. Last time around we had a divergent high. The stock dropped 28%. So take out, and look, right after the wedge break right there, took out hit the 50. They bought the 50 as they always do, bounced it, and then it took it out for good, and we dropped. Hit the 200s. They bought the 200s, but it bounced back to the 50. They sold the 50, and then it took out the 200s. But then, for all the reasons stated, we covered there. I didn't have this one particular. I'm talking about all shorts in general. Okay, next up, SIG. This is a setup I gave you. It's broken down below the trend line, and that is an objective short entry. It's close. You can wait till this is end of day, or you can short it now. Half a position is probably prudent, and then wait to see how it follows through next week. SOXX semis are holding the line right now. This is a very significant and very comparable trend line to QQQ, and actually it goes like that. And then I had a minor trend line here, and that one's starting to crack, and this is your primary trend line. And we need to see the semis buckle as well to really get some a real sell-off going. So there's your kind of your levels, uptrend line, again, minor, primary. If you look at the 60-minute chart, I haven't updated it for a while, but there's a uptrend line I had. That one's been broken, and I just have to move my divergence line up, and it grows bigger and bigger. It's still very much intact. And there's a breakdown and an objective short entry on the semis based on the 60, or you can wait for the daily chart and see what we get there. Ethereum. Okay, so as I've been saying, there's a handful of trades, and this one has been a risk-on trade. The same kind of crowd that's all whipped up in a frenzy over AI tends to be the same kind chasing the latest hot thing du jour, and that's crypto. So Ethereum has broken down. I'm going to modify this trend line, and I'll tell you why I'm doing it. I can see here, hopefully you can see, there's a little bit of a shadow on that candle, that the bottom part, the skinny part that's a little lower, and then one right there. So just to err to the side of caution, I'm going to lock it in. Now, what I just did, I came in exactly on that. I'm starting exactly off the lows, exactly at the bottom of that candle. I had it cutting up to the body before. Now I'm going to the wick, or the tail, and that tail. And again, to give it the benefit of the doubt, but we're still below there. So I just modified my trend line. The way I had it before, we were clearly below it, but now we're still below it. Divergence tells me it's going to break down, and this jives with the stock market. So what'll happen? The same folks that are chock full of NVIDIA right now are probably chock full of Bitcoin and Ethereum and a bunch of shit coins and all that. And then when the market drops, NVIDIA ultimately drop, kicking and screaming. It's nothing about fundamentals. It's about money flows. $1 into QQQ gives, what is it, 8 cents or whatever into NVIDIA. $1 out, you take $1 out of QQQ, you sell it or short it. They got to pull 8 cents out, and so Invesco has to sell NVIDIA. That's how it works. So no matter how good the fundamentals are, it doesn't matter. When you're in heavy index, live and die by the indexing is the motto really for these big stocks. And so again, all that stuff goes down, and everybody's leveraged to the hilt right now. I've showed you the FINRA margin interest going parabolic at all-time highs recently, and again, it's an incremental but increasing vicious cycle, if you will. The lower everything drops, whether it's crypto, especially the big AI stocks, and the market itself, and the hot flying stuff that people are, most people, I highlighted Pepsi today. Most folks aren't loaded up on margin on Pepsi. The crowd that's trading on, those phone apps, Webull or whatever, a lot of those are the retail money using leverage. And so they're in the high flying stocks, and then those have to be sold. And then the other things that they have in their account, also they get a margin call. The broker's going to sell it for them if they don't. So either way, there's Ethereum. And I just want to point out, because I had a price alert. That's why I'm doing this. So I'm sure I didn't get one on Bitcoin, but I can do that for you. IBIT, and show you the Bitcoin's coming off that divergent high. I just don't think I have an alert set. Oh yeah, I already had one trigger the other day. That's why we broke down. I gave you that already. So signal there. And you can see big support, that green line and the primary uptrend line. This is just massive support for Bitcoin. It breaks that, it's going a lot lower in my opinion. And I think it will. I think the market will. I think the market's on a bubble that may have started to pop today, but we'll see. All right. Lithium. All right. That one broke down yesterday. You can see the zoom in nice and tight, breakdown and a solid close below. Hit the first target today, and then I told you the next sell signal would come on a break below 56. I had T1 at 56.09. We took that out, and that opens the door to T2, which at this point, depending on how fast it falls, we may hit this price support level first. T3 is at 52.11 if things unwind fast. Otherwise, they come back in. And if you're wondering where to add to or initiate a short, maybe on a test of the gap. This is today's gap right here, and a little kickback to that, and then those are still your final target, still T5. XLK I already covered. That was one of the alerts I had today. BIZD, I had an alert when it hit T4. I went over that in the video, and again, like I said, if you are a believer they're going to gobble up this and negate today's sell signal, you could definitely step in and buy these. Like I said, it's if the market's going to turn around and have that a big ramp up and go up another 10-20%, I can almost assure you these BDCs, business development companies, are going to stabilize very soon. And when it's clear that that their prices have stabilized, you're going to see a lot of money flow back into these, at least the initial pop. And chasing that yield. Like I said, a lot of these guys, even though their dividends will probably get cut, they're still going to be yielding a lot. Get cut down from 15% to 7 or 8, even that's still a good dividend, right? So, but like I said, with the sell signals today, you want to just be careful. There's a lot of relentless selling, and as I said before, it's a vicious cycle. It can be. As they go down and they're selling, and then they all of a sudden have to liquidate. If enough money comes out of these, they may have to start liquidating some positions as well, and then that selling triggers additional selling. So again, QQQ I already covered. Again, I'm just clicking through my alert log today. ADP needs to break this level here. I might have got an alert on it, but it hasn't clearly taken out. 285.11, that'll trigger the next drop down to my next target to 72. ITA, I just covered that today earlier, gave it to you as a trade idea in the video, and it has broken down now. So it has triggered an objective short entry, and I like that one too. And then finally, this one triggered an alert today, but I think I might have moved the line is what I did. That's what happened. Now I have it right here. 1, 2, coming up on 3 reactions, that 50-day moving average. It's just one of many. It's one of many banks. We're already short. Fifth Third is an individual stock. We already hit my first target. That was now after dancing on it for about a week. We've now taken it out. That increases the odds we're going to hit my second target. And then when that's taken out, T3, that is also a sister trade, if you will, because it's a regional, super regional bank, to KRE, which has now hit my 61.68 target. That one was shorted here, highlighted the back test. It's really a continuation of this big divergent high here. Drop down, took out this primary uptrend line right here, broke down, back tested for all the reasons stated, cover all shorts, go full long there. It back tested a couple times and now it's being rejected and probably headed a lot lower in my opinion. And last but not least, I know I just covered them today, but I put silver and gold in that pot with the stock market and crypto and AI and everything else. It's the same crowd chasing that, seems to me just from price action and sentiment. So we'll watch those. And GLD, they're still above the trend line. Again, I just covered them earlier, but here's a good example. Remember, gold, as I told you, in times of market duress, can get a bid to safety, flight to safety bid, but GDX, they're simply gold mining stocks, operative word stocks, and they tend to get sold down in stock market panic sell-offs. And it's, if you trade it on its own technicals, it gave us yesterday that bearish engulfing, took out the trend line, and I've given you targets on the 60-minute chart. You can see here on the daily, that's what the first stop would be right there, most likely. Unless gold and silver break down and the hammer really comes down on them and the dollar's rallying strong, and et cetera, et cetera. All right. Let me stop it here. I'll wrap it up. This has been Randy Finney with Right Side of the Chart. Have a great day.